We're now going to wrap up this first topic by having a look at our fifth and final section, so ethics and a professional approach. In all of your ACCA exams, you will have to consider the 5 fundamental ethical principles, and tax is no different. So let's have a look at these. For some of you, this may be a reminder if you've seen them in other ACCA exams, and for some of you, this might be the first time that you're having a look at these. The first ethical principle we have is integrity. And essentially, integrity is about being open, honest, transparent, straightforward in all of your professional and business relationships. Objectivity is not allowing any bias or conflict of interest or any undue influence from others to compromise your judgment, and that is your professional or business judgment. Confidentiality, this centers on respecting the confidentiality of information that you will come across or you will acquire as a result of your professional and business relationships. And essentially that means that you are not allowed to disclose or benefit from that information that you have acquired as a result of those relationships. Professional behavior. This centres on complying with relevant laws and regulations, but also avoiding any conduct that may bring our profession into disrepute. So carrying out any conduct that the professional accountant knows or really should know that would discredit the profession. And finally, we've got professional competence and due care. And professional competence and due care is about maintaining sufficient professional knowledge and maintaining sufficient skills to ensure that either your client or your employer receives a competent professional service. Now let's consider what these 5 fundamental principles means when we consider operating an ethical practice as a professional accountant. So the fundamental principles are there essentially to help us establish a standard of behaviour expected from a professional accountant. When you face a situation with ethical dilemmas, it is really important that professional accountants recognise any threats to compliance with each of the 5 fundamental principles as early on as possible, and then take appropriate action to reduce or remove those threats to compliance with the principles. Now, as it would suggest here, you need to consider compliance with your ethical principles at the outset of any engagement or piece of work. That's to enable you to establish if there are any threats early on. However, it is also important to note that they should be reviewed on a regular basis as you progress through a client engagement or through a piece of work. Where there are ethical dilemmas or threats, then appropriate action needs to be taken, and we call these safeguards. So we put safeguards in place to reduce those ethical threats down to an acceptable level. Where we cannot reduce the ethical threats down to an acceptable level, then we do need to consider other appropriate courses of action. If it's a client engagement, that may be declining that client assignment. If it's in an employment role, then in extreme situations, you may need to resign from that role. And finally, in this first topic, let's take a look at an illustration. Let's read the scenario. So a professional accountant is engaged by a client to prepare the client's tax return. During the course of their work, the professional accountant becomes aware that the client has failed to disclose a source of taxable income to HMRC. The professional accountant has queried this with the client, whose response indicates that they have no intention of disclosing this amount to HMRC on the appropriate return. This is what we are being tasked with. Using the ethical framework, set out the factors and possible actions the professional accountant must consider to resolve this ethical dilemma. The first step here would be to consider if all the relevant facts are known. So, for example, the professional accountant, now that they've become aware of this particular source of taxable income that hasn't been disclosed, they may choose to investigate if there are other sources of taxable income that also have not been disclosed. Once all the relevant facts have been established, the next step is to consider the ethical issues involved, and in particular, the threats to each of the 5 fundamental ethical principles. So in this case, if we look at integrity, clearly the client in this situation is not being open, honest, transparent with the professional accountant. And that will make it more difficult. It is a threat to the professional accountant's own integrity in terms of their dealings with HMRC. So we have a clear threat to integrity. Having a look at professional competence, the professional accountant needs to apply due care and skill to this appropriate return, whichever return it is that they're doing, and that is threatened if they are not able to disclose a source of taxable income. Having a look at professional behaviour, there are 2 threats to compliance with the law here. The first one is compliance with the tax legislation itself, and the second is compliance with the money laundering regulations, because failure to disclose a source of taxable income will fall under the money laundering regulations. Confidentiality is very important here. Now, the professional accountant is not allowed to disclose any information about the client without their consent generally. However, the money laundering regulations will override this. Also within this situation, the professional accountant, due to the ethical threats, is no longer going to be able to continue to work for this client and is going to need to inform HMRC of that fact. However, due to confidentiality, they are not going to be able to tell HMRC why they are no longer acting for that client. And then finally, we have objectivity. We need to consider, is there going to be anything that will influence or prejudice the professional accountant's judgment in this scenario? And maybe a common example that we might see is a threat to objectivity called self-interest. And this might come from the fact that this is a fee-paying engagement. If the professional accountant does something that the client doesn't like, maybe encourages them to disclose, and the client really is opposed to that, then the client may not pay the fee. And that is a threat to the professional accountant's objectivity in this case that needs to be built in. The next thing the professional accountant needs to consider is, if they are working within a firm, are there any internal procedures that exist and need to be followed to mitigate the ethical threat? Once the relevant facts have been gathered, the ethical principles and threats have been considered, and any internal procedures have been considered and followed, the next thing to do is to look at the alternative courses of action. And the most likely scenario that we would see here is as follows. Firstly, the professional accountant would advise the client to disclose the income and also set out the penalty implications of failing to do so. And that advice and the penalty implications should be set out in writing. Then the professional accountant will need to make a report under the money laundering reporting regulations, and as I've said, that overrides any duty of confidentiality. In doing so, however, the professional accountant must take care not to tip off the client. Tipping off is a criminal offence under the money laundering reporting regulations, and tipping off would be letting that client know that you are going to make a report or that you suspect money laundering and may make a report. That allows the client to cover their tracks, and then, as we said, that might prejudice any money laundering prosecution going forward. If the ethical threats are so high, then the professional accountant in this case would consider resigning from the client. As we said, HMRC need to be informed that the professional accountant can no longer act for that client. But importantly, due to confidentiality, the professional accountant would not be able to inform HMRC for the reasons for no longer acting for that client. And that is the end of our first topic, Introduction to Taxation. I hope you found it both interesting and helpful and are looking forward to the rest of the course.